what happens when two multi-billion-dollar technology ETFs bump into each other in a dark alley? Well, only one thing can happen, and it's called ETF Battles. And in this episode, we're going to take a look at Invesco QQQ ETF versus the Technology Select Sector Spider Fund, as ticker symbol XLK. They're going to duke it out. Hello, everybody. I'm Ron DeLegge, and today's matchup between QQQ and XLK is like Led Zeppelin versus the Rolling Stones. It's hit after hit after hit. And while neither ETF is of British origin, at least not that I know of, both are venerable and they can both sing. Nevertheless, there can only be one winner, and I've got my battle scorecard. It's ready. It's blank, and it's ready to be completed. And to help us to judge this battle, this matchup between these two tech heavyweights, is Todd Rosenbluth, head of ETF and mutual fund research at CFRA, and John Davi, founder and CIO at Astoria Portfolio Advisors. Gentlemen, welcome to the program. Great to have you with us.
Great to be with you, Ron.
Thank you, Ron.
So enough with my bantering. It's time to get this battle between QQQ and XLK started. We're going to go through these four battle categories one at a time. Each of you is going to pick QQQ or XLK as the winner in each of these respective categories, and you'll have 30 seconds to do that. Let's start with the first battle category, cost. Who wins the battle between QQQ and XLK? Let's start with Todd. You've got 30 seconds. Go.
Yeah, hands down, XLK is the cheaper of the two ETFs. 13 basis points versus 20 basis points for the triple Qs. They both trade with penny bid-ask spreads quite regularly. They both trade in line with the net asset value. Those are three metrics that we at CFRA are focused on. You've got competition from Vanguard and Fidelity putting pressure on State Street to continue to bring pricing down. 13 basis points, and it's likely to be lower. There's nothing like the triple Qs, and that's why it's much higher in price.
Excellent. Let's go to John. What's your take on cost? Who wins the battle?
I would agree with everything that Todd says. I mean, it's XLK is cheaper in terms of management fees. I would say that just from a liquidity standpoint, QQQ is a more institutional product. Big hedge funds trade it. If you're trying to play like an event or trying to play like an earnings release, QQQ's trades about 60 million. Shares a day, XLK about 20 million in the secondary market. Obviously, there's a primary market if you're looking to do big size as well for the XLK. But I'll say that Qs are a little bit more liquid. I find generally speaking compared to XLK, but XLK is cheaper in terms of management fees. So I agree with Todd.
Okay, let's move to the next battle category, which is exposure strategy. And of course, each ETF has its own little particulars. Let's stick with you, John. Who wins this particular battle category?
I think that XLK is more pure tech. If you just look at we use this tool, ETFaction.com. 100% of the stocks in the XLK obviously are in tech, whereas with the Qs, 16% is in consumer discretionary, another 20% is in communication services. Tech is only about 50% of the ETF. You've got some healthcare in there. So I look at QQQ as more of like a catch-all, kind of stocks that are well represented on a NASDAQ exchange, where XLK is just kind of pure technology exposure.
Excellent. Todd, who wins this particular battle category, exposure strategy between QQQ and XLK?
The triple Qs is a growth ETF, whereas XLK is a tech ETF. These are just different animals, and what's inside really helps to drive that. We at CFRA, when we rate ETFs, we touched on cost. We also look at the risk and reward characteristics. And when you combine those risk and reward characteristics of those holdings and of other metrics that are there, XLK stands out better. Its risk profile is much lower. You've got more blue chip companies within the technology space like Apple and Microsoft, but also Visa and MasterCard, which people tend to not think of as technology companies. With the triple Qs, you're going to have a lot of smaller companies, moderately sized in other sectors. So XLK stands out better from an exposure standpoint, from a risk and reward profile.
Excellent. We need to move on to the next battle category, which is liquidity. Todd, what's your take on this particular category? Who wins?
Yeah, John touched on it a bit earlier. So the audience that we at CFRA are working with tend to be more in the wealth management space. So while the volume tends to be a little bit higher for the triple Qs, it's still sizable enough volume. The liquidity is strong enough for both of these products. So we would consider this a toss-up between it. If you're looking to get a trade done and get it executed, you're going to be able to get it done using either of these products. So you really don't need to pay that premium for the liquidity. The liquidity is strong for both of these products.
Excellent. So it's a split decision in liquidity. John, what's your take?
I would agree with what Todd said. What I would say is that, for the XLK, if you look 22% in Microsoft, 20% in Apple. So a lot of concentration, just those two names. If you did have to do like big size, because of the creation and redemption process, you can go to an authorized participant. Those are fairly liquid ETFs, and you can get, greater size on if you had to for XLK. But, if you're an RIA or a financial advisor, you're probably not going to be trading in huge size and doing creation. So, I think both are, fairly liquid in the secondary market. A little bit higher for Qs than XLK, but I think you can get plenty of risk off on XLK.
Excellent.
Yeah, see, Ron, he keeps agreeing with me. So thank goodness this isn't a battle between two analysts, because I'd be winning that camp.
Oh, my goodness. He's copycatting. Okay, let's move on to the next and final battle category, which is performance. John, who wins the battle?
In terms of, something that I want to go back to what Todd said. I don't know if I'm allowed to kind of go backwards, but, what I find is that for our work and what we do, we like kind of higher quality stocks, and you've got a little bit more towards ROA and ROE in terms of, their ratio versus the Qs. For me, performance is a lagging indicator. I like to look forward and say, okay, what's going to happen in the future? Large cap, tech, large cap growth have led the market. I wouldn't necessarily say that this is, the one sector I want to kind of be overweight, going forward, just because it's had a tremendous, run over the last 10 years. But I do like the XLK just because it has a little bit more higher quality stocks, and that kind of fits our firm's DNA. So that I would use XLK just kind of around what our core investment philosophy is, which is to buy high quality stocks, hedge that risk with, higher quality bonds, and then further hedge it with alternatives.
So Judge John, you have to make a battle pick on performance. Is it QQQ or XLK?
In terms of pure performance, I see that the Sharpe ratio is a little bit higher for QQQ over the last 10 years, like 1.02 Sharpe ratio. XLK about 0.99. It's basically a wash, to be honest. But I wouldn't necessarily buy the Qs because it's had better risk-adjusted returns over the last 10 years. I would, kind of focus more on XLK because I think it's a little bit more higher quality. So I would give the green light to XLK.
Excellent. And Todd, what's your take on this final battle category, performance between QQQ and XLK?
Yeah, we think investors can get hurt looking too far in the rearview mirror at an ETF. These are index-based. They're not actively managed, so there isn't the same skill that's there. But if you looked at a 3-year track record and the 1-year track record, XLK has outperformed the triple Qs. It's only been this year that the Qs are actually outperforming. If you looked at those 3 data points, we at CFRA are more forward-looking and looking at those holdings, and we find more attractive stocks from a reward and risk perspective with XLK. So I would give the nod to XLK on this one.
All right, very good. So now we're going to give each one of our judges 30 seconds to recap their final overall ETF battle winner between QQQ and XLK. I've been keeping this scorecard, and I'm going to share with you the final results on that. But let's start with Todd. Who's your final overall battle winner between QQQ and XLK?
Yeah, my winner is XLK. So it's the cheaper of the 2 products. The liquidity is not that big a difference. From a performance standpoint, it's outperformed. And from a risk-reward perspective, as we at CFRA look forward, it stands out even stronger. So unless you're looking for a growth portfolio, if you're looking for something head-to-head, XLK is the winner hands down.
And John, what's your final battle winner between these 2 tech heavyweights?
I would say XLK, but for different reasons from what Todd said. I think that it's got a higher ROE, higher ROA, higher, dividend payout ratio. And then if you look at the earnings trends for XLK, they've been a little bit more elevated compared to the Qs. The earning trends have been going pretty sharply down, whereas XLK is, trough hasn't fallen as much, let's say. So we like XLK, in terms of from a fundamental forward-looking basis, which is kind of how we invest at Astoria Portfolio Advisors.
Well, thank you, judges. And according to my scorecard in this hard-fought battle between QQQ and XLK, the winner is XLK. That's the Technology Select Sector SPDR ETF. It beat its opponent in key battle categories like cost, exposure, strategy, and performance. Liquidity was a split decision. And you can see there my scorecard. It looks like a Jackson Pollock painting, actually maybe Jean-Michel Basquiat, because of the fact that we kept going back and forth. But nevertheless, the judges have spoken. And so this particular round of ETF battles, we all survived despite a few nicks and bruises. So thank you, Todd and John, for doing a fine job at judging this matchup. And so put XLK on your watch list for those of you looking for a technology-focused ETF. This is a good one. Which ETF battles would you like to see in our next episode? Post your thoughts on our YouTube comment section or hit us up on Twitter at ETFguide. Be sure to use hashtag ETF Battles. Thanks for watching ETF Battles. And until next time, watch the battle before you invest right here on ETF Guide TV.